The stock markets have had the worst first half year in decades. The Dow Jones, the S&P 500, they've both been just smashed crazily. The crypto markets, obviously, getting smashed right along with that, as correlation between crypto and stocks remains super high. But what if this is just the beginning? What if the stock markets are still going to crash dramatically and the total drawdown is going to be more than 50% for stocks? What if this is still just the beginning of the crash and far from being through the worst of it so far? What if we are just in the eye of the storm? Well, that is what famous investor Michael Burry, who came to fame, of course, by being played by Christian Bale in The Big Short, but by also shorting the U.S. housing collapse in 2008. That was also kind of important in his rise to fame. But is he right or is he wrong again, as he has been so many times before? Well, let's talk about that in today's video. My name's Lark. I make videos on investing. Now, if you do enjoy that particular topic, then please subscribe to the channel. Also, smash on the thumbs up button. Every single like on the video equals a 1% pump for the markets, so make sure to smash it good. Don't think about it. It's just math. Just do it. Okay, let's get serious. Let's get into this. So Michael Burry, he is a famous bear, and right now he is saying that we are in the greatest speculative bubble of all time, and that stocks and crypto are still not even close to hitting their bottoms, with his predictions saying that we could still see prices fall under the COVID crash lows. That was terrifying when that happened. That means we could still go to much scarier places. That's obviously bad news for crypto investors, bad news for stock investors. You might already be down 70 to 90% on a lot of your investments. Well, they're going to go down another 90%. This is what is called the mother of all crashes. Why are we facing such an epic crash right now? Well, Michael Burry says that there are many factors that are working against the markets in this current environment. Obviously, the rising cost of borrowing due to interest rate hikes, slowing down consumer spending, which obviously is going to hurt corporate profits. And then, of course, there's just so many different things that we can consider, like the fact that, well, stocks were pretty damn massively overvalued. Many of the tech stocks were trading at like 100x their earnings. Got a little crazy there for some time. In fact, if you look at the crypto space, we had dog meme coins that were tens of billions of dollars. In hindsight, it seems like that was a bit crazy. We also factor in the fact that the dollar is right now having an epic rally, the DXY hitting its highest levels in 20 years, which basically means that the market is continuing to flee to safety, or the perceived safety of the dollar, on the fears that a further drop could be coming. Michael Burry also raised fears that inflation could actually persist a lot longer than anyone currently thinks it could, perhaps even for years, which would be terrible for markets. Add into that the continued risk for geopolitical turmoil, primarily what is happening in Ukraine right now, with just so many things continuing to come out of that entire war. G7 threats, for example, to cap Russian oil prices. That could cause market chaos, as they're one of the biggest oil producers in the world. It could spike the price of oil massively. Then recession fears are saying that the price of oil could drop massively, up or down. Either way, it's just bad. That's what's going on with the price of oil. And on top of all that, there are continued fears that China might try to, pull some shit in Taiwan. So, yeah, you can kind of understand why markets have just been so damn shaky, why there's still so much fear in the markets, why so many market analysts, not just Michael Burry, are calling for stocks to fall even further. And with correlations between stocks and cryptocurrencies near all-time highs, we should absolutely expect more pain to come in for cryptocurrency investors if this warning from Michael Burry actually becomes true. What are we talking here? We're talking $10,000 Bitcoin, $500 Ethereum. Altcoins, just pray that they survive. At this point, basically everyone thinks the USA is heading for a brutal recession. The only difference of opinion for 90% of people who think we are heading towards a recession seems to be on when that recession is officially going to be announced, how long it's going to be, and how bad it's going to be. But isn't this the same kind of groupthink that is always wrong, right? Isn't the crowd wrong most of the time. The contrarians are the ones who are right. The contrarians right now are the ones saying that we're not heading for a brutal recession. But anyway, by most accounts, the US is already in a recession. Actually, from a technical perspective, that is what we have confirmed recently, with 2 quarters of basically contracting growth happening for the US economy. And what happens in a situation when we have a runaway inflation? Remember, Michael Burry, he is speculating that inflation could last for years, combined with a huge slowdown in economic growth. Well, that's stagflation, my friend, which is not good news. Now, before I discuss whether or not Michael Burry is right, I want to interrupt the flow real quick to let you know about my weekly investor report. It's called Wealth Mastery. This comes twice weekly to your inbox. In this newsletter, we talk about NFTs. We have no BS altcoin reviews, airdrops, token sales, tips, tricks, all kinds of crypto information. Our subscribers love it, and I know you will too. You can sign up for free using the link down below in the description. All right, now let's get back into it. Look, right now, it's pretty damn popular to be a bear, and super bearish headlines are obviously grabbing a lot of attention. So anytime Michael Burry says, well, the sky is falling, the media tends to pay a lot of attention to that. But like all things, we must try to divine the truth for ourselves. Remember, just because a famous investor, in this case Michael Burry, nailed things in the past, like the 2008 housing crisis, it does not mean that he is always right. In fact, no investor is always right. That's why you have to, manage your own risk and all this stuff. He's been wrong plenty of times. Although sometimes he was right, but just at the wrong time he was right, which is still being wrong, but just less wrong. Basically, I'm going to translate that for you. That's bear talk for I was wrong, but I still want to save face. That being said, Michael Burry has also been spectacularly right on quite a lot of stuff before. He called not just the 2008 housing crash, which obviously because the movie he became very famous for, but he also called the top on Bitcoin at 69K. He called inflation like 6 months before it happened. He called the top on Tesla. So look, it would be unwise to just say what we want to hear, right? Burry's wrong, the markets are going to pump again soon. Look, there's a lot of great reasons why the market could pump again soon. Maybe inflation is nearing a peak and commodity prices coming down might be a sign of that, et cetera, et cetera. But we have to be realistic right now. There are still huge systemic risks that remain in the markets. But you have to also take into account Burry's previous predictions. World War III did not break out in 2016. The stock market did not crash in 2019 when he was calling for an implosion of implosions. In fact, it actually rallied pretty damn hard. So yeah, he was right. Calling a stock market crash just a few years too early, missed out on all the massive gains. He was also wrong about index funds being the next subprimes that are going to collapse the market back in 2019. He's been wrong on a lot of stuff. At the end of the day, Michael Burry's points that you're bringing up right now, they're good points. They're hard to refute based on the current evidence in the markets, but putting all of your faith into one investor's calls is risky. Look what they're saying, evaluate the information that they're giving, and try to ask yourself, does this make sense? Is he right in what he's saying this time? Right? I appreciate Burry for the conviction that he has, the calls that he makes, and yeah, sometimes he's going to be wrong. That is the nature of making calls, that is the nature of investing. Absolutely nobody is right all the time. But his warning still remains valid, and it is a very important one. We as investors must be mentally and financially prepared for more downside in the markets. Maybe it doesn't come, but if it does come, you are prepared. Always remember, markets can stay irrational longer than you can remain solvent. We're in a bear market. Survival is key right now. Absolutely key. That means maintaining a strong cash position, not being forced into a situation where you have to sell your assets because you need cash, right? That's limiting spending, that's focusing on creating more income. Don't rush into things too quickly, but also don't stop investing. Stay consistent, keep buying in with long-term focus, and you're gonna make it out the other side of this bear market ready to reap massive rewards. The people who invest during bear markets are the ones who become millionaires in the future bull markets. It's true. Anyway, what do you think? Is Michael Burry right in this situation? Are we still in for massive pain in the markets? Or is he wrong, like he has been before? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.